Okay.
Okay, we are live. Good morning, good afternoon, good evening. Just depends on where you are in the world and when you are watching. Hopefully, you are joining us live this morning. My name is Clara Lyons-DeVaughn, and I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. So, Lyonsview launch Financial Fridays to help you stay current on those trends that impact your bottom line. Our goal is to provide you with resources, information, and tips to assist you in making the best financial decisions. And so, our commitment is really to maximize your wealth building power, not just today, but now and in the future. So, I just want to welcome you. So glad that you tuned in today. Feel free to like and share this video with your friends. And remember, our guests are here as a resource to you. So, feel free if you have any questions, put them in the comments section. If we don't get back to them during the broadcast, we'll definitely get back to you after. And so today's guest, I met, God, it's been what? Several years.
13.
Quite a few. But I met her. She is also a member of the National Association of Real Estate Brokers. She is a phenomenal um, real estate professional in the mortgage industry. And we are going to be talking today about mortgage money because that is so, so important when you are looking at your finances, just those resources that are available to you to assist you as you move forward. So, without any further ado, I'm going to introduce Miss Mayarani Smith. I affectionately call her Maya, and she's going to tell you a little bit about herself. Hey, Maya.
Hey, good morning, good day, good afternoon, good evening, whenever you're watching this live. I just want to say thank you, Clara, for inviting me. And I know this is going to be a fully charged educational seminar session. So I really would like you guys to get your pens and paper, whatever it is that you have in front of you, ready because I have a lot of information. First of all, I am a senior loan officer with Canyon Mortgage Corp, and I do hard money commercial and residential loans nationally. I help people, first time home buyers, get into homes, finding resources for down payment assistance. There's so much information out here that I know a lot of people are unaware of. I tell people all the time if you're not ready, you may not think you're ready, and you are. And now is the time to start. So,
Indeed. So Maya is a wealth of information. And Maya, really, what makes you so passionate about loans and their impact on wealth building?
wealth building to me, I think, is generational and it should be passed down as a legacy. And it really inspires me to see other people become homeowners, especially when they think they can't. Because people get stuck. They feel like life happens. I've lost a job. I mean, you have to wait till you're reemployed, but things do happen in your life where your credit is affected. And there are so many resources to even fix your credit. And you might not even think that you're ready, but you are because you have to really look at your whole picture. You can always start from today. Today is the day to start over and start over with your life when life happens. So I'm here to help people get in their homes. And even once you're in your home, I make sure that you stay in your home.
Indeed. And that's important because I think people, they see the short picture, the I wanna, and don't always look at the long picture of how to get started. So when someone is starting that process, what are some of the things that they need to have ready so that they can interact with you?
Oh, I ask for everything. I want all your information, your W 2s, your tax returns, everything. Because actually, even your pay stubs are very important with W 2s. Some people really think, oh, I make like $60,000, $70,000 a year. I'm just giving that as an example. And they might have unreimbursed expenses. They've written off like 20,000. So even if you're at 70 and you've written off 20,000 with unreimbursed expenses, your actual income is 50,000. So now I have to factor that dollar amount into what you qualify for. So you can only afford less house.
Yeah.
So there
And
are a lot of factors, even people that are self-employed, they write off everything down to like 25, 30,000. You cannot buy a house with showing that on paper.
it,
So I can teach you the tactics and what you need to do.
mhm,
So you can start, like I said, today.
indeed. And a lot of folks don't realize that there are a lot of options in how you can secure a loan. So, can you share a little bit about the types of loans? You mentioned some in your introduction, but maybe dive a little deeper about that and, specifically what you offer that other lenders don't.
Okay. I'm going to go through a list of mortgages.
Okay.
Different types of financing. There's conventional, Fannie Mae, Freddie Mac. There's non-conforming financing with private banks.
Okay.
Government-backed loans are FHA, HUD, VA, and state loans.
Okay.
What is a conventional conforming loan? Those are loan products that are available through government-backed entities called Fannie Mae
What,
and
what,
Freddie Mac.
what did you call that? Conventional
Conforming loan.
conforming loans. Okay, I'm gonna put that in the chat.
Okay.
Okay, you can keep
That's
going.
Fannie Mae and Freddie Mac.
Uh-huh.
Those are for 1 to 4 family properties with
Okay.
condominiums and co-ops. Loan amounts are up to 417,000, 625,000 in higher market areas. You need as little as 5% down of your own money, and you have private mortgage insurance. Anytime you put less than 20% down, you need private mortgage insurance. So, what does non-conforming mean? Simply a loan product that doesn't conform to Fannie or Freddie guidelines. They have higher loan balances. We have stated income loans, which means you're stating an income but not proving it. We do non-approved condominiums, and as I said, co-ops.
Okay.
Now
So
we have, go ahead.
so there's a conventional conforming, and I'm typing the wrong things. Conventional conforming and conventional non-conforming.
Correct.
And
Non-conforming are the higher balance loans, like the 625,000,
like,
$500,000 loans.
is that the same as the jumbo? They used to call them
Yes.
jumbo
Yeah.
loans. Okay. Okay.
Yes.
So the difference between the conforming and the non-conforming is basically just the price,
The dollar amount.
the dollar,
Correct.
right? The dollar amount of the purchase. Okay, gotcha. All right, we're ready to move on.
And then we have government-backed programs, FHA, low down, lenient credit, income standards, and rehab property loans, which we call a 203K. You only need 3.5% down. That can be a total gift, or you can get financing with the down payment assistance. So I'll just use an example. In New Jersey, we have New Jersey Housing Mortgage Finance Agency. They give up to $10,000 grants. So that's one area. A VA loan is for veterans. That's 100% financing. USDA is in rural areas. That's another 100% financing option. And then, like I said, we have state programs. There are also sometimes county grants that you can get in certain areas.
Gotcha. Now, someone asked the what was the difference between a co-op and a condo on the conforming loan?
A co-op, you don't own the property outright, you own shares. A condo, you own like a house. But a co-op is shares. You have a board that has to approve you. It's a whole nother animal, but it does work for some people.
Gotcha. And that's part of the conforming type of loan.
That is only a conforming loan with a co-op.
Okay.
Yes.
Purchase that. Okay.
You can't get it with a government loan at all.
Okay. Gotcha. So we have our conforming loans, our non-conforming loans. The difference is the price, and then we go to our government-backed loans, which give you basically assistance and a lower down payment, essentially.
Correct.
Okay.
So I'll talk about the FHA loan. What
Okay.
is an FHA loan? Federal Housing Administration. It's a government loan. It's a mortgage loan funded by a lending institution and insured by HUD, Housing Urban Development. It's for all residential properties, 1 to 4 units. The minimum investment is 3.5%. Down payment and closing costs can be a total gift. So
Hmm.
if you have a family member, they can give you the whole amount for your down payment and your closing costs.
On the FHA. Okay.
Correct. Yes. Only FHA.
And
And FHA loans have to be owner occupied. You have to live there.
now for the FHA loan, when you say family member, who's considered a family member?
Mother, father, sister, brother, aunt, and uncle,
Okay.
grandmother, grandfather. It's got to be close.
Indeed. Indeed. Okay.
And
So
also,
they
you
can
have
give
a
you your down
seller
payment
contract.
and your closing costs. That's awesome. For
Isn't
as
it
a gift.
awesome?
As a gift.
Yes.
That's amazing. Okay. Great. Okay.
And also, with an FHA loan, you can get a seller contribution of up to 6%, which means the seller can give you up to 6% of the closing costs.
Okay.
That is awesome. On a conventional side, it's only up to 3%.
Gotcha. Gotcha. So basically, you could have all of your down payment and closing costs covered either through a gift from a family member or from the seller giving you some assistance with that transaction.
Correct.
So that limits your out of pocket. So it's affordable, folks. You can do this.
Hmm. And I highly recommend, a lot of people are not aware, to get the free money. There is money out there for first time home buyers. And for those of you who have already owned a house, if you have not owned a house in the last 3 years, you are a first time home buyer again, and you would qualify for the grants. So I will say that again. If you have not owned a house after 3 years, you are a first time home buyer again.
Indeed. And a lot of people don't realize that. So I'm glad that you pointed that out. If you haven't been on title anywhere for 3 years, your clock resets and you get to do it again as a first time home buyer.
And that's awesome. It's like, let's do it again. And that's important for some people because sometimes things have happened. You may even have lost your home.
Mhm,
You may be divorced. But
mhm,
as I said, you can start over and start
mhm.
again. Home
Yeah,
ownership doesn't have to end just because something in your life ended.
yeah. I think I heard the other day, I don't know if you said it or was someone else, that they had done a deal with a woman who was what, 70 something years old, and she was
Hmm.
purchasing a property. So it's never too late, and you can be 18. So
Hmm.
that's the youngest you can start, and
Correct.
up to 79. The woman was 79 and she was purchasing a property. So there is no time limit on you getting started with your home purchase.
And the whole thing is they cannot discriminate on age.
Indeed.
So that's
Indeed.
why you can even get it at an older age.
Cool. Cool. So the FHA, 3.5% down. You know,
Hmm.
you can get assistance from a family member or from the seller. Up to seller up to 6% is what I heard you say, and
Correct.
from your family, it can be all of it, the down payment and the closing costs. That can be a gift to you.
And
Now,
there is a product on the conventional side. In some cases, you can do 3% down. It's something called Home Ready, but it's
home.
only in certain areas and it's based on the area and the price of the house.
Okay, so the area, the price of the house. Now, with the FHA or the conventional, does the buyer have a minimum amount of money that they have to put some money into the game?
I always recommend that you should have at least 3 months reserve. Say your mortgage payment is 1,500 a month.
Mhm.
At least have 3 times that amount saved. And
Okay.
I tell everybody all the time, even though you're getting into a house with maybe no money down, you don't know what might happen. You may need to change the boiler. Things can happen when you move into a home and you want to have a cushion. So I always tell people save, save, save
Indeed. Indeed.
for that
So
hard time.
we've done the conventional, conforming, we've done the conforming, the non-conforming, the government-backed FHA, the government-backed
Mm-hmm.
conventional. Am I am I right? No. Yeah,
Yes.
yeah.
Yes.
FHA conventional. And
It's so much, right?
yeah, yeah,
Take
there's
notes.
lots of money out there for you folks. And you
Mm-hmm.
can get grant assistance from the different cities and counties and through other various programs. So and put that with your loan. So that's a whole nother thing. And we've done broadcasts on the various down payment assistance programs. So you can go to um, the Lyonsview Realty YouTube station and see those things where it actually goes into detail on the various types of down payment assistance programs. So we're not going to dive deep in that today,
But
but
the one thing I will say about those programs, sometimes people don't fit in that criteria for the
mhm,
down payment assistance. I
mhm,
have a bank that will actually do the whole 3.5% down. Your minimum credit score is 620, and we have a debt to income ratio at 49 back end.
that,
So if you can't get the local county state grant, you may qualify for this grant. And the difference between this is you don't have to live there a certain amount of time. It is a true gift. So you
that,
have to keep that loan for 7 months and refinance out. After 7 months, you
mhm,
never owe that money. That was your whole down payment. I've
that
done a few closings lately.
that is huge. That is
Yes.
huge. So you can get the down payment assistance for your 3.5% down through the
Hmm.
program. Keep it for the 7 months. Refi it after that, and it's totally forgiven. That's amazing. That's
Yeah,
great.
the interest rate is a little higher, but it's worth it.
That is great. That is really, really great. So,
And I want to talk about a few other products
okay, cool.
before we really recap, because it's a lot of information and I'm going to really try to go through it quickly.
Okay,
But we also have an FHA 203K renovation loan that's still with the 3.5% down, and you can still get a gift for that.
okay,
So the renovation loan means, like, say you see a property for 150,000, you need 50,000 in repairs. Your loan is like 200,000. Same criteria, 3.5% down. On the conventional side, the rehab loan is called a home style loan, and you only need 5% down, but you need 5% down of your own money.
okay.
And then we have investor loans, 1 to 2 family, or 20 to 25% down. But what I tell people, when you're looking at a renovation loan, you're looking at properties that we've seen on the market. A lot of people don't like the house because, oh, it needs a new kitchen, new bathroom. This is the type of loan that you would use to renovate the property and make it look the way you want it to look.
So, on the renovation loan, how long does that take? Longer than a traditional loan? About how long does it take? How many days to get through that process?
Okay, usually if it's not more than 35,000 in repairs, that
Hmm.
could be done within 30 to 45 days.
Okay.
But anything over that dollar amount, like say you need $100,000 in repairs or more, they have up to 6 months to actually do the deal, complete the work, but you still do close in 45 days or more.
Okay.
So
That's great.
once you close, the work starts.
Okay. Awesome.
So you got questions for me?
No, no, that was perfect. So, are those all of the products that you wanted to talk about?
Yeah, there are investor loans. Some people don't understand what hard money is.
Yeah,
So
about that a
that's
little
for
bit.
buy, fix, and flip. A lot of investors like to flip a property. They invest maybe 150,000 and they're putting 300,000 into it to flip it.
Hmm.
We have hard money loans that are only based on your income. No, excuse me, not your income, your assets and your credit.
Okay.
So you don't have to prove the income for those loans. That's a 1 year term, sometimes a 2 year term. The
Hmm.
interest rate is a little higher. It starts around 8.25%, and
Hmm.
it's interest only. So
And
I
how
have
much?
a lot of investors right now that are actually fixing and flipping.
Yeah. And how much money do you have to put up front on that particular product?
On a one family, 20% down. And
Okay.
they do have acquisition money for renovation and repair, all inclusive.
Got it. Got it. That's pretty cool.
So one family is typically 20,000. I mean, excuse me, 20%. I got
Okay.
the 20,000 in my head. 20% down.
20%, yeah, right. And then if you have like a two family or a
If you have a three family, that's 30% down of the purchase price.
gotcha. Okay. Awesome. So we've talked about anything else specifically that Kenya does. So you guys do the product with the 3.5% down, where you can
Mhm.
actually, get that granted, and not have the
Gifted.
get that gifted and not have the time frame. Well, the seventh month is the time frame for that to basically be forgiven,
Hmm.
which is a pretty powerful product. Is there something else specifically that your company
Well,
offers that other
what I'd
companies?
really like to explain also the
Mhm.
difference between myself working at Canyon Mortgage and other lenders. I am a broker.
Okay.
So we don't close and fund any loan in our company. I broker to other banks. So
Okay.
even though I'm brokering, the buyer is not feeling a broker fee. So you're getting my products and services for free. And that is a misnomer that people have. They don't understand that every broker does not charge a fee, even for the first time home buyers. The only people that really pay a fee is an investor, and
Mhm.
depending on the type of loan.
Gotcha. Gotcha. So the fees, or I call them points in the closing
Mhm.
costs, that's not part of.
Not part of a FHA or conventional loan. No,
Gotcha. Oh, that's pretty cool. That's pretty cool. So I don't want to say the word discount, but then that might mean that the closing cost fees might be a little bit less than, say, with other companies.
correct. I actually get better interest rates because I'm on a wholesale side. So for the first time home buyer, I have actually gotten lender credits. One person got a lender credit of like $3,000 towards their closing costs, depending on what the rate is at the time.
Very awesome. That's pretty cool. That's pretty cool. So one of the things that you talked about, there's a lot of different programs, and most people are familiar with FHA, conventional. A lot of people are not familiar with the rehab side of the equation, which I think is important because with HGTV, people have a certain expectation, of
Hmm.
what they would like. And also, moving into a new property, they want to make sure that the property is in the condition that they would like. So, having a rehab loan is a possibility. While folks are going gung ho in the seller's market, overbidding for the houses that have that HGTV look, they're passing up properties that are really beautiful properties, have the functionality that they need in a home in terms of bedrooms, bath, square footage, and they could be in that property and have it the way they want at the end of the day.
Hmm.
So I think it's important for people to remember the rehab loans and the rehab products when they're looking at how to achieve their dream of home ownership. Now everybody doesn't have the 20 and 30% to be an investor, but you gotta you gotta get in the game to be in the game. So that's a different market for people who are purchasing homes for their residents. The fact that if you haven't owned a home or been in a property for 3 years, you can reset that clock, start over, and be a first time home buyer again and take advantage of all of the resources that are available to you um, as a first time home buyer.
And what I tell people also is don't be afraid. Don't
Yeah.
be afraid to look at where you are because it's fixable. Sometimes it takes some people longer, could take them 4 or 5 months, but get on a track. I work with people all the time. I don't turn people away because even if you've had something happen in your life, like I say it all the time, let's start from today. Don't wait Because right now the interest rates are still so good. They're
Interest rates
still
are,
so low.
yeah,
I've
they're
seen
super good.
2.75 for a first time home buyer. I mean, you want to really take advantage of that right now. And Clara is a realtor. She will even know how to even give you guidance on the property that might not even look right. It might be disheveled, it's old. People have not lived in a property for a long time or have lived there too long and it needs repair. That's where you use your rehab loan. And
Mhm.
it kind of gives you a sense of being an investor because it's your own property you're investing in, you're building it, you're building equity. And another area I would really like to share really quickly, don't be afraid to be a landlord. Buy a two-family house, get that rental income. Now, if you're afraid of knocking on the door to your tenant, somebody like Clara would know somebody that can handle it. That's why we have property management. You get a property manager to collect the rent for you. So you don't have to go door knocking yourself. And it's only like a 10% fee of the rental income. So it's really worth it to be a landlord in your own property.
Indeed, indeed. That's we talked about that too. The house hacking.
Hmm.
Your mortgage can kind of be paid for or offset if you go into a multi-unit and live in one of the units. It's a excellent, excellent point. There's something else you mentioned that I want to get into before we jump off, which is there have been a lot of recent changes, with the legislation around debt forgiveness, during this pandemic. So, the things with forbearance. Do you have some context or can you kind of update on what's going on in that area now that we're coming out of the pandemic?
Well, they're talking about changing a lot of the legislation with the student loans, but it hasn't been effective yet. So I'm slow to speak until I see it happen. I'm sorry, but they're trying to make it a little more relaxed and affordable because, as everybody, I don't know if everybody knows, but with your student loans on an FHA, they count 1% of the total loan as your debt. On the conventional side, it's a half a point, half a percent. And if you have $100,000 loan, that's a lot of money
Mhm.
added to your debt. So it hurts when you're looking to buy a house because your debt to income will be too high if they're counting the total loan.
Right. It's interesting. We had actually recently we had a gentleman come on and talk about the new legislation around the student loan. So you can actually catch that video again. Go to the YouTube channel and get that information. And we're going to be doing a workshop in August. I put the link on the page. It's going to be the second week in August, Tuesday evening, so you can get information on student loans, the different types of repayment for that debt schedule. Definitely go back and look at that video, but this workshop is going to go into more detail. So the link is on the page, LL Student Loan Workshop. It's bit.ly LL Student Loan Workshop. If you want to get the registration information for that workshop, it's a free workshop, but really diving deep into how you can repay it and actually how you can build that resource for student loan and talk about the legislation. Look at that video as well. So, do you have some things that are coming up, Miss Maya? How can people contact you if they want to get with you about the various ways that they can get funds to invest in their dream of home ownership?
You can actually call me directly at 201-927-1008, and I can actually get back to you right away. I'm working from home these days because of COVID. I mean, if I have to meet people in person, I do, but I am direct access 7
Say,
days a week.
say your phone number again, 201.
201-927-1008.
1008. I'm gonna put it with your name so it'll be in the file forever. So people
And you
will.
can text me, you can text your email, whatever it is, you can call me. I will always be happy to help.
Yeah, Maya is a phenomenal, phenomenal resource for all things money, and knows how
Thank you.
to.
Thank
Yeah,
you.
And money is important. I mean, it's the resource that allows you to be able to get into that property of your dreams. Oh, one thing that we didn't talk about. Can you say quickly the documents that people need to prepare or to have in place um, to get with you to start the process?
I need your W-2s for the last 2 years, your tax returns for the last 2 years. If you are a W-2 employee, I need 1 month of pay stubs. I would like all pages of your bank statements. If it says 1 through 5, I need all 5 pages.
Even
I
if it's
need,
blank.
even if it's blank,
Yes.
because we do have to count it for underwriting. And I need 2 months bank statements. And for self employed people, if you have a business, I need your business documents, your EIN, and your tax returns and your K1s.
Okay. Awesome. Awesome. Thank you for sharing that. And do you have any events, webinars coming up that you want to share that you've got going on?
I'm setting up now. I'm the regional vice president of the National Association of Real Estate Brokers for New York and New Jersey, and I'm setting up a calendar of events. So if you guys are interested, I will always keep you on the calendar because right now it's summertime. We kind of slack off for 1 month, but we will be picking back up in August.
Awesome, awesome. So I want to thank those of you. Thank definitely Miss Maya for joining us today. Thank those of you who tuned in and listened today. Financial Fridays is here as a resource to you to give you information, tips, and trends on those things that impact your bottom line. So I hope that you have received something of value to you today, and that you take away, if nothing else, that home ownership is available to you. You know, home ownership is available to you. It's one of the number one ways to build wealth in these United States of America. You can take that asset and leverage it over and over and over again. And I just want to thank you for joining us today. So we are coming out of this pandemic. Hallelujah.
Thank God. Thank you, Clara, for having me.
Oh, thank you for joining us. And I just want to encourage everyone, take care of yourself, take care of your family, and definitely stay safe. My name is Clara Lyons-DeVaughn, and Financial Fridays, we stream on live on Facebook and YouTube on Fridays at 9:30 a.m. Eastern Standard Time, so you can join us again. Um, until then, keep living your best life. Thank you so
Amen.
much, Miss Laya. Appreciate, love you very, very much.
Love you too.
And we will see you again.